Right, Venus, 156, question 156. So, a quite a broken down question, which is good. A lot of places to get marks. So, I think that first of all, this is where we start talking about the engagement letter. And it's like an engagement letter is any contract. So, anything you can think about where you can argue that anything that could have changed from this year to the next in terms of the terms of our agreements. So, it could be the scope of the work, fees, if personnel have changed, really. Um, any sort of typically it's typically scope, personnel, budget, any audit cap issues, of course the dates, if you like, are important. So let's see what you I think you could, I guess, reiterate their responsibility. Maybe there's some extra work that you guys are carrying out. But typically, if you've been in contact with this business, that's kind of the nature of the work you're going to be doing. Any particular key areas you'll be focusing on a bit more, and a reminder of their responsibilities, your responsibilities. That's pretty much, it's nothing but 2 marks, to be fair. And then the same thing actually. Well, this is the indicator, the fact that the scope, you'll be doing more work and therefore charging more, or a certain people have changed, engagement partners or even key management personnel within the organization. That's the reason. And those are the matters I've been talking about. The 6 matters which should be included. The sorts of things I've been talking about. How we're going to go, the audit plan, if you like. Right. And I think you kind of, I think I gave you, yes, I gave you 2 out of 2 here in terms of, yes, you very correctly highlighted the fact that any statutory work, any updates would need to be taken into consideration, engagement letter amended, and that was right. That's good. We'll look at the answers, but that's good. So date, of course, terms, fees, responsibility. So you can expand on this. The fact that they will have to carry out written, all very good. But I think what you want to do is now, when we look at the answers, you want to be expanding on these, and giving a bit more information. But good, but that's good. Um, then I don't. Let's look at what the next question was. Then 5 sources of information. Big question. This, I think we might have come across this before, but it's not a difficult question really, and you do quite well. Although no, I think this is your first time answering this question. So the correct answer is there's an internal sort of an external. When I say internal, I mean whatever you expect it to be. We just want to understand how this business was audited last year. Let's go back to the question. Or we want to gain. We want to gain an understanding of the business. So. Um, I mean, you're right. These are points, but I'm going with the mark scheme. And so, standardly, we'd say, from a standard point of view, we say, well, we want to see the financial statements from last year. We want to see management accounts from last year. We want to see forecasts, if you like. We want to see the audit file from the previous auditors, if you like. So these are all internal issues. We want to see any management minutes. I think you have a few things you highlight there, but definitely this first one was good, and the second one. So I think I probably have given you 2 here. Um, You're not wrong, I think, with these. They do. Yeah, exactly. So actually 3. I think maybe because of the way you wrote it. So I think I'll give you 3 out of 5 there. And then of course you want to look at what's going on. You want to look at the markets. When I say the markets, you want to go online and just see what's happening with their competitors, understand the industry a bit more. Um, Look at their website, that sort of thing. Just look at what's happening with this organization, in general. So let's look at Venus. What is Venus doing here? Um, so Venus, a couple of things, and let's look at them again. By now, from the next previous questions, you're picking up a lot of what's going on here. So all manufacturing companies, we know that we're thinking whip. I always just think whip straight away. Is it the first time? I don't think it is. So during the year, the review the useful lives, exactly, we've covered this area of reviewing useful lives. Anytime you see an extension of useful lives, you know there's a potential here that assets will be overstated and depreciation understated, and therefore expenses understated, and therefore profits overstated. So the question is why? What's going on? Why are you doing that? And our simple argument is, after discussing, we want to actually see how long they're actually using these assets for. If we can find other assets that are matching this suggested useful life, fine. If we can't, then we know that then that's not true. You're selling your assets for a much shorter period, and therefore you should be depreciating for that sort of period. So we have inventory here held in and these days, for adjustments to the move for the year end. It's what it is. There's very little we can do. We can't insist. So we want to make sure that we attend these, of course, and make sure for completeness, if you like, and I guess existence, we want to make sure that all the journals happening post that between these dates and the 31st. I mean, if there's no movement, that's brilliant. But if there's any movement between the 29th and 31st, we want to make sure we have full records of those movements to adjust, to make sure that inventory is right, complete, exists at least, and then we can discuss evaluation as a separate topic. Um, and it says this is due to a lack of available staff. So we already have issues with control. We're thinking, do they have enough? This is quite dangerous. This is the only time. This is a year, 1 year audit. So are we? What there is a risk here. Um, unless if the argument is that we're holding it on the 31st because there's a lack of staff, that's fine. So that's fine. 20th and 29th, that's okay. It's better that way. Um, so there's a fire. This is damaged, and this has been written down to scrap value. We are worried about that anyway. It might even be less. Who's valued this? Some happy manager. It might even be worth 500, if you like. Maybe I don't know, 50,000. This is currently 200,000. So we have an insurance claim, and again, it says if they're waiting to hear, and this has been included in the insurance proceeds, you can probably think straight away that you can feel prudence should tell you that we should not be recognizing income until we've received it, right? Prudence anticipate losses, not profits, right? So you shouldn't be recognizing this now. You should wait. You should disclose, but you should wait. This refers to a contingent asset, but doesn't even just prudence alone should guide us and go with that kind of fundamental accounting thinking. So that's the risk that therefore revenue is overstated, if you like. So the risks are all in these numbers. The bank recs again, we see incomplete. Sorry, here has he done them? Reconciliations contained. That's right. However, no, that's not true. Banks should be fully wrecked, complete wreck. There is no materiality with bank rec. It's literally to the penny. So there's a control problem there, and potentially maybe other issues. Again, this just gives us this fact of bonus schemes highlights the fact that we might be dealing with potential errors. He wants us to do it earlier on. Again, these are professional skepticism because we're thinking there might be the risk of error here. So if he wants to commence earlier, so the final results available, we can suggest response interim audit. We can start doing some earlier work. Yes. Right. So let's look at their answers. Well, let's look at your answers actually. So you pick up. I think again, like I think I've given you 6. So we cross over the 5/10 line. So you say increasing use is less depreciation. Correct. Potentially now you see these are good. So this is good because you're now getting better at highlighting these movements. Yes. Good. Yes, that's right. And established. Now you're there. This is good. I think you understand that. Better. I'm right here. So you're there. Um, being incorrect if the movement. Yes. So this question of incorrect is an interesting word. We like to use overstated and understated. Correct is a bit vague for us. So yeah, so you want to be there anyway for the 29th. It's really the examination of all the journals and all the movements post the year end you want to tag on, that you want to really almost kind of take a full, not just a sample, take a full population of all the movements post year end to make sure that your final figure is correct. If you see what I mean. So you count your inventory on the 29th, get all the goods received notes and all the goods delivered notes post that date all the way to the 31st, and kind of add that in and adjust that to make sure that that's what's going on, that you have the right figure on the 31st. Um, Yeah, bank difference is all very good, always material. So there's a risk of, yeah, I would go as far as saying fraud personally. Yes, and then the recs are done. Yeah, sure. Insurance proceeds, but insurance has not yet been declared good, and there's a risk. Good, very good, very good, very good. And that's kind of you see where we're going. Intimidation threat. This is a yes. I think we can put it that way. It's a threat. Good, and then you highlight this that they will feel rushed and errors. The key point there is errors. Explain and think of interim. Good, good, good. So let's look at the answers. Let's look at their answers, and what are they telling us? Um, let's look at their answers. Venus. Venus is telling us to. Here we are. So again, engagement letter. Um, yeah, it says any indication the entity misunderstands the objective and scope, reclarifying or clarifying any misunderstanding, any revised or special terms, recent change to senior management, change in the size of the business, any legal requirements, anything you can see there, framework changes, objective responsibilities of management auditor. Yes, of course, the expected form of the report, what we intend to give, their expectation to provide written representations, um, restriction on auditor liability. Have your pick, but you've done some good work there. Anyway, if we're going to be bringing in any experts, right, understanding the entity, everything we talked about, I've gone through this as well. You highlight a lot of the things anyway. Accounting documents, discussion with management, company website, year-end budgets. Let's jump straight into the risks and the responses. Here we have reviewed the asset lives. Again, you talk about this. What's the rationale for that? I think you probably should have given you more marks there. So let's look at this. The fact is that this might be overvalued. So during the year, supporting all adjusting items. So again, after the year end, we just want to make sure that we will extend. So you want to highlight this. I didn't mention that, this cutoff testing at the year end, because the chances are there might be errors with those, if you like, in terms of in terms of the completeness of the inventory, completeness of the inventory. So, um, fire damaged 0.2, is it really? It might even be less. So the question is, that might be overvalued. So we need to discuss how you've arrived here, and look at the post year end sales of that product. You're right, talk about good 0.7. It's overstating that. It's not quite there, so we should remove it and just disclose contingent asset disclosure. Yes, and bank recs errors could and the immaterial. Um, you highlight this, unreconciled amounts could lead to fraud. There's just no materiality really and it's a control issue as well. So we know that there might be issues here. Um, Again, it says, like you said, request that this is fully reconciled. Yes, and then work through that reconciliation that's been done. You don't do the reconciliation throughout the audit. Again, fraud, professional skepticism. This again is highlighting what we say: pressure to manipulate, and then professional skepticism, and carrying out even more sampling, because we're aware now. And again, of course, this question here, I think I mentioned that you can't remember everything, but this is one that's creeping in: the written representation that they have. I mean, you would do that anyway. That they have made the judgments and are not aware of any fraud or any um, manipulative activity. Again here, confirmed interim. This is a bit about them requesting. It's not a crime. They wish to rush, but the risk is the detection. We would have errors, so we want to make sure that we can come in and do some interim work. It's not a problem, but we just need to be alert in the risk of errors. Cool, great, and that's that. And we'll see you in the next question.